Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and then talk about VA and USDA one-time construction loans. We'll wait just a few minutes here for us to go live on all the different platforms because we are streaming this live on YouTube, Facebook, and LinkedIn. So just give us a moment here. We put the chat up on the screen, so feel free to drop a comment there as you tune in the chat. We appreciate it. We'll get started here in just a moment. Happy Friday to everyone. Perfect day for the loan officers out there to get out and make some calls. And we got a cool topic to go through here today, kind of building on what we've been going through for the rest of this week here. So I see some people dropping comments in there already. We appreciate the comments. We're waiting a couple minutes here to get rolling. All right, it looks like we are live on all the different platforms, so we'll go ahead and get started. We're going to take the chat off the screen, but feel free to keep dropping comments in there as we go through here. And feel free to drop any questions you have as well when we go into the deep dive here today. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on the show is go through some live mortgage rates for different programs. Then we do a deep dive into a different topic every day. Today's deep dive is going to be building on what we've been doing for the rest of this week. So this day is going to be VA and USDA one-time close construction loans. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to go into a deep dive into that shortly. But before we do that, we'll do what we do every day, which is pull up the live mortgage rates. So Nick, if you're ready, let's pull up the pricing tool and see what the market is looking like this morning.
All right, switch my screen and we will check it out. All right, so this is our pricing tool for our team of mortgage professionals. It is going to show us the general rates and APR. For today, it is September 22nd, just after 11 a.m. Eastern. So we have all of our general programs live with new rates. So we will check that out. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with one of our team members. We have over 400 loan officers in 24 states for primary and second homes, and we can do our business purpose in 44 states, so quite a bit more. Now for our demo today, as we do every day, we'll set up the same scenario so we can compare across the programs and compare the APR. So for all the demos, we'll set up a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. Set the desired price to $99. That means we'll ask the computer to find the best rate at one discount point to cost, which is a typical request these days. We'll compare our conforming conventional programs to FHA is usually the next best option. And then we'll check into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs. And we don't do VA or USDA live. Jose does have an example later today for those. So VA is only for our eligible vets and active service members. If you are eligible, let us know. We can quote it no problem, as Jose will do later today in a specific example. And same with USDA, that's only for eligible properties. So if you do happen to be shopping in one of those areas, we can quote it no problem. We'll start with conforming conventional. We'll do purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these settings, as we do every morning, let's see where the rates are at. And yeah, they're still up there from this week's, I guess, not so good, but kind of bad news. So the market's reacted what we would say negatively. So 7.499, best rate today, 0.75 discount points in cost. Final APR, 7.657. So hopefully when Monday rolls around and the things relax, we will see some relaxing in these rates. Now, if our customer doesn't qualify for conventional, the next option we usually want to present them with is an FHA option. So FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio, but we'll keep everything exactly the same so we can compare apples to apples on the APR here. And FHA is still about the same as it was yesterday, 6.625 rate, 0.759 discount points and cost, puts the final APR at 7.209. So if our customer qualifies for both programs, FHA is actually a little bit cheaper in this case, which has not always been the case here. So definitely want our customers that qualify for both to check it out, and our customers that must use FHA, definitely some great changes they have made there to the mortgage insurance that is included. Now, where we really love to specialize is if our customer, unfortunately, may not qualify for either program. Many other banks or lenders will have to deny that customer their home. But here at the Mortgage Calculator, we have over 5,000 other options we can use here under expanded guidelines. So we click this option. Everything else will stay exactly the same, but now we have a new option pop up for income. With non-QM, we can use alternative income. So full doc is what we use for FHA, and conventional, that's 2 years of tax returns, what most people are used to. So we'll use a non-QM program to take advantage of one of these alternates, such as asset-related, business bank statement, personal bank statement. 12-month is the program we always use for our demo, RSU, stated income, VOE, 1099, P&L, no income, all kinds of different options. The most popular for a primary home purchase is going to be our personal bank statement 12-month, and that's for our self-employed borrowers. Many times it's our self-employed borrowers when they submit 2 years of tax returns, may have write-offs and may not qualify, or just may not quite get enough income to get that home they really want on their qualification. Therefore, we can solve that problem by using no tax returns at all. We'll simply use their last 12 bank statements to determine a debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns involved. And typically that will allow our borrowers to qualify for much more income and therefore get the home they really want. So let's check out these bank statement non-QM options this morning. And it's about the same as yesterday here. Best option at the top, 7.5 rate, 2.875 discount points and cost. A little more cost there for non-QM. But the final APR, 7.629, right there with conventional, almost identical, right? So great option here for our customers that need a little bit extra help. And it's pretty amazing that we can do our non-QM options for almost identical cost to conventional. So our customers that need the extra help, definitely check out these programs, reach out to our team. And if we scroll down here, you see there's dozens, if not hundreds of different versions of these bank statement options. Some of these are a little bit higher rates and costs, obviously allow us to use bank statements for income, but also may allow us to get around other issues such as bankruptcies, foreclosures, and credit type of issues that would cause us to not qualify for conventional or FHA. And before we go into Jose's USDA and VA examples, we want to do some investment property live pricing here. So for our final two examples, we'll do investment property, we'll do ADLTV, just like our other demos, and we'll compare our investment options. We'll check out the conforming conventional programs, and then we'll go into our non-QM options. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll start with conforming conventional. Everything will stay exactly the same. The only change we've made here is investment occupancy. So we can see the adjustments the conventional programs have added to an investment property. And yeah, the pricing's a little bit weird here, so take this with a grain of salt, right? This is technically the lowest APR, but this is too high of points for us to meet compliance. So this is just for demo purposes, 7.75 rate, 4 discount points in cost, puts our final APR at 8.017. So unfortunately, conventional is up over 8 now here on the investment properties. And unfortunately, there are no options for 1 discount point in cost. The best option the computer found here with 4 discount points isn't compliant, and most investors wouldn't choose this anyway, right? $16,000 in this example is a lot of money that most people would rather spend elsewhere. So most investors ask for other options at possibly higher rates for lower cost, but there are no options for conventional because of the way conventional pricing is these days. So most of our investors, we definitely recommend, I'd say 99+% of investors will choose a non-QM program in this market. So for our final demo, we'll choose expanded guidelines, also known as non-QM. And for this one, we'll have to choose our income. The most popular for an investment property is going to be our DSCR. That's because it doesn't require any income from our borrower, no employment, no income from our borrower. We simply use the estimated rental income from the property to determine a DSCR, stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage payment plus expenses, that's a ratio of 1.0 or higher, aka the property cash flows on a monthly basis. We even have options for ratios under 1.0 where the property may not quite cash flow on a monthly basis. For the demo, we always put 1.5, which is the highest value, so we can see all the options pop up. And for prepayment penalty, this is standard. We always choose 3 years for the demo as the most common. We can choose 0. That will limit the amount of options that show and cost more. We could also choose 5, which will again limit the loan programs, but save us some money for those programs that do have it. Since 3 years is the most common, that's the one we always choose for the demo. So let's check out the DSCR rates today. Oh, almost beating conventional. Beating with our best DSCR, we're beating like 99% of the conventional programs, right? There was one or two that had a little bit lower APR here. So great options here. Best deal today, 8.125 rate, 0.725 discount points and costs. So our investor client is happy, right? $2,900 instead of $14,000 is a big difference. And the final APR is almost identical, 8.182. That's why I'd say 90 plus, probably closer to 99% of investors that are presented with a quote in this market are going to choose a non-QM or DSCR option compared to a conventional option. So definitely check out all these options here. Now, if we scroll down, we'll see a lot of different DSCR programs we have. Some of these at a little bit higher rates and costs may allow things like bankruptcies and foreclosures, may allow things like short-term rental income, and other variations. So tons of different options here. Please get with our team to find the best one. And now let me switch my screen and we'll get into today's deep dive topic, which is cool since we don't do our live pricing for VA or USDA, since those are specialty programs that require special qualifications. Remember, as I say every day before we go through the pricing, we don't do VA live because only our eligible veterans and active service members, that we definitely appreciate their service and they do deserve their eligibility for this program, but not everybody out there is eligible, right? You have to get your eligibility by serving. And USDA is only eligible for properties that are in an eligible area. So you do have to search. It is very specific. It's yes or no. You just run it through the search. Some addresses, some some zip codes may have places that are allowed, places that aren't allowed. So you can't just go in general cities or states or areas. You do need to check the zip code map every time for USDA. That's again why we don't do the live pricing, because we don't know, who's watching out there, if their property may be right on the edge and they're assuming. So we want to make sure we're very clear that with these demos, there is a couple hoops you have to jump through, especially for VA and USDA, to even basically have us quote it, right? We want to make sure you're actually eligible before we send out some quotes for that. So in this case, we're going to look at our VA and USDA one-time close, which is where we can buy empty land and build a brand new home. Remember, that's one-time close. This is not renovation. We did that a couple days ago, where we're buying a home that existed, even if it was burned down to the ground. A home was there, and we're fixing it. Totally different than today. We're talking about buying empty land and building a home from scratch. So one-time close, renovations, very different. We have both options. Today is one-time close. So if you're ready, Jose, let's have you take over.
Absolutely. Good morning, everybody. Thank you for joining us. Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. So we have been in our construction mode this week, trying to show our audience outside the box options that we love to offer at the Mortgage Calculator. As we are not your typical lender, we have multiple options out there. Not just the cookie cutter options that a lot of the lenders like to offer. So in our outside the box approaches here, we've presented to you the renovation loans, which was a more limited approach to financing, where you're basically purchasing an already existing property and financing it and doing renovations to it that may be of the choice of the borrower, They want to buy their dream home, so they're going to make the one that they're purchasing their dream home by, for example, um, remodeling kitchen cabinets, new appliances, remodeling bathrooms, putting in new windows. Maybe if you're in the hurricane areas like we are, hurricane impact windows, so you can save on your insurance. Putting in a new roof, so you can also save on your insurance. A myriad of options that would make your home your dream home. Or it could be that you're looking to purchase a foreclosed property that has been vandalized, as is often the case with a foreclosed property, is missing components that would render the property not financeable with standard financing. So those are two of the best uses for the renovation loans that would benefit our borrowers in the purchase, and could also benefit our borrower on a refinance if they're looking to, again, refinance their current home, converting it into the dream home instead of having to move, because we all know the limited inventory out there may make that a difficult endeavor. Or they could just have some issues with the property that they really need to take care of, right? Roof is leaking, windows are leaking, you need to replace it and repair it. You don't have the money, you don't want to use credit cards, and you don't want to use very expensive financing. So obviously, tapping into your home's equity with the renovation loans would be a great option there. Now, with that being said, what we're doing today is the one-time close program, which basically kicks it up a notch. This allows you, the borrower, to purchase the land and build the home all with one loan, hence the name one-time close. What's so important about this product is that besides allowing you to purchase the land with the same loan, which is, financing land is very difficult. If you were to look for a land loan in any other way, it would probably have to be some type of a bridge loan, hard money type loan, just to allow you the time to put your affairs in order to be able to get the construction loan. But in this case, we're offering you the loan, the one-time close loan that allows you to purchase the land, allows you to build the home, and then transitions into your end loan without a need for additional financing, refinancing, which would be then additional closing costs, right? So we're eliminating that scenario. However, you will note that sometimes these loans may have a little bit higher rate or costs associated with them due to the fact that essentially the lender or investor on the loan is extending the rate out for the full term of this loan. So until it basically transitions to your end loan, that's the risk that they're taking, which is why you sometimes see a little bit difference in the rate for these products. Now, the examples we're showing today is VA and USDA. Now, there are restrictions in using this product for VA and USDA loans. First and foremost, it limits the units to one unit. They do not want this to be an investment type loan. So this is limited to one unit properties, and it is limited to purchases only. This is not available for rate and term nor cash out refi. The one-time close loan is available only for purchase. So our first example here is a VA one-time close loan. This is 100% LTV, and our loan amount in this example is $500,000 on a $500,000 purchase. So you're looking at your lowest cost option, 6.75%, having roughly 1.6, 1.7 point cost to that, with your lowest cost option being 6.375 for your VA 100% LTV one-time close program of a one-unit property. So now our other option that we have here is USDA one-time close. Now you will note that on the renovation side, the VA did permit 1 and 2 units, but on the one-time close side, they only allow 1 unit. USDA, on the other hand, on the renovation loan, only allows 1 unit, and on the construction loan, the one-time close loan, which is the one that we are showing you here today, also only allows 1 unit. Primary, of course, only 100% LTV. You will note the same rates as the one-time close, but the cost on the rate is a little bit lower. We're looking at 6.75, and again, this is also 100% LTV. So you're looking at 6.75% with a cost of, I think that should be like 1.625 points, and 6.75 is your lowest rate option. So very good rates. You'll note that those rates, even though they're one-time close, they still look to me to be a little bit lower than the standard rates that you would be able to obtain on a conventional financing, for example, right now. So very good options for USDA borrowers, but do remember that USDA, the property does have to be in an eligible area. So you would go to the USDA geocoder, plug in the property address, and see if the property location falls within the requirements. And of course, on VA, you have to be either active military, or you have to be retired military, or a spouse of a deceased retired military to be able to apply and obtain VA financing.
All right, I don't see any questions. So good stuff. Appreciate everybody tuning in. We do this show 11 a.m. Eastern every single weekday with the live rates, and then doing a new deep dive into a new topic. So we will be back here Monday with a new topic to go through. Thank you everyone for tuning in. Thank you, Nick. Thank you, Jose. And we will see you on Monday for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great weekend, everyone.
Thanks, everybody.
Thank you, everybody.